as you may know, it allowed for businesses to use pre-tax dollars to fund direct primary care services for their employees. So before that OBBB, the big beautiful bill, it had to be post-tax dollars towards the direct primary care memberships. But now that it's pre-tax dollars and it's allowable with HSA funds, and there's no restriction on HSA funds for direct primary care anymore,
Wow.
um, we are seeing more adoption because it becomes more financially palatable for the CFO of the company to say, okay, we're going to do this because now it's pre-tax and it works well with our HSA plan.
Right, right. And then you just, for the younger people, you get a catastrophic plan, right? And team it up with a DPC and you're covered.
Yeah, well, let's separate two separate issues, right? If you're an individual freelancer, maybe a small business, yes, you'd want to buy a catastrophic plan off the marketplace, or maybe you'd be a part of a health share like Sedera or Zion or Curo. There's a handful of those out there. But really where this direct primary care movement takes flight is when a large employer group with 1,000 employees wants to buy a direct primary care membership for all of their employees. And then they go out to a direct primary care doctor like myself and they ask, will you take care of my employees? And I say yes, and we'll hire two more doctors to help do that work. And then you get 1,000 more people adopting this new model that makes healthcare more affordable, more accessible, easier to use, convenient, and all of those things.